Let's switch gears here a little bit. I want to bring in our next guest. We have Tom Orlik. He's the author of China, the Bubble That Never Pops. And Tom, just to get your thoughts, congratulations, first of all, on your new book. In it, I know you're discussing China's economic situation with a focus on its debt-ridden economy. The book was written, obviously, before the world was disrupted by the coronavirus outbreak. So factoring that in now, how do you characterize or how do you view, I guess, China's current economic situation?
Well, thanks for having me on, Shauna. Great to be here. The motivation for me in putting pen to paper on the book was really to try and explain how China continues to defy the doubters. So much debt in China's economy, and so many economists and analysts looking in from outside have said, this is a bubble, it's going to burst. So the motivation for me as I put pen to paper was really to explain, well, why doesn't it burst? How does China manage to defy the doubters? Now, COVID-19, of course, is a human tragedy. It's also an economic and financial stress test for the world and for the Chinese economy. All of the biggest borrowers in China's economy, the state-owned enterprises, the real estate developers, the local governments, they've all seen income collapse in the first 6 months of this year. If there was going to be a financial crisis in China, surely it would be now at this moment where all the biggest borrowers have seen their income disappear and they're not able to service their loans. And yes, China has had a very bad first half of the year, but no, they haven't had the financial crisis. The bubble continues to stay intact.
Hey, Tom, Rick Newman. So I'm hoping you are going to tell us why the bubble never pops in, 30 pithy seconds for TV. But it's obviously quite a time, perfect timing because of everything that's happening. So one of my questions is, for the last, let's say, at least 20 years, much of the world has helped China along. I mean, we all loved getting those cheap products, and most, companies were eager to relocate production there. Could one of the things that pops the Chinese bubble be more pressure from the West if we do end up in some sort of economic Cold War with China?
Yeah, that's a great point, Rick. The focus for 2018, 2019 was on the trade war and tariffs. And there is a possibility that we will get more US-China tariffs as we approach the presidential election. That's not my personal forecast, but it's certainly a possibility. But I think what people miss when they focus on the tariff question is something bigger that's going on. And that is a larger reconsideration of the China relationship. And we see that here in the US across trade, technology, finance, education, research. Government and businesses are reconsidering the China relationship. And in many respects, government is tightening the screws, making it harder to do business with China, making it harder to have scientific exchanges with China. Now, going back to Deng Xiaoping back in 1978, it's engagement with the world which has driven China's growth, the capacity to learn from foreign ideas, foreign technology. So if that gateway, if that doorway starts to creak closed, yeah, that's a negative for China's medium-term growth prospects.
And Tom, maybe just thinking about how, let's say, like Western public media understands China's economy and what has happened and what hasn't happened. I mean, I think about your book alongside, Mike Pettis and Matt Klein's book this year, maybe reframing for some people how to think about what the imbalances really are in China. Is there maybe one misconception that you think continues to be persistent about how China's economy operates that just simply isn't true? Because quite a bit has changed in the last 15 years. It is not really the manufacturing kind of output center that it was maybe 20 years ago. And the way it wants to build up its middle class, consumer class, like the US, that's certainly a different outlook for them. So how do you think people are still maybe misunderstanding what China's economic program really is?
Yeah, it's a great question, Miles. And I would even take a step back and think about the larger misconception or the larger misframing that we have when we think about China. Now, there are so many massive differences between China and the US, China and the West. Democracy versus a single party state, capitalism versus state ownership. And because of these differences, I think there's a danger that we view China through a kind of angry red mist. And all we see is differences. And all we see on the Chinese side is risks and failures. And certainly there are enormous problems there. Debt is a problem. Inefficiency in the state sector is a problem. The shrinking working age population is a problem. But there are clearly also enormous strengths. Massive saving rate, which enables the banks to have a very stable source of funding. That's a key reason why the bubble never pops. A state sector which is inefficient, but also a powerful driver of development. And as we see in the COVID-19 shock, a powerful instrument which the government can use to cushion against recession and drive recovery. So there's certainly misconceptions. I try and correct some of those in my book and bring some balance. But the larger point, I think, is that because the China-US relationship is so important, if we only see the negatives and we don't see the economic strengths that they have, we're missing a big part of the picture.
Well, and Tom, just drilling down, though, once again, just in terms, I know you mentioned one of the key reasons why China's bubble doesn't pop, but what else are we missing? I mean, it has to be more than just that one thing. There have been so many issues, so many people that have called for the coming collapse of China or the fact that China's economy won't make it. And yet it still continues to, I guess, tread water at some places and also grow in other situations. So what is the key reason as to why the bubble never pops when it comes to China's economy?
So there's two key things, Shauna. So the first one is we focus entirely on the asset side of China's bank's balance sheet. We look at the loans, we look at how quickly loans have expanded, we look at how loans have been made to zombie businesses, to real estate developers building ghost towns in the desert, and we think, this can't end well, there has to be a crisis. But the reality is that financial crises do not start on the asset side of banks' balance sheets. Lehman didn't fall over because it had too many investments in mortgage-backed securities. Korea's banks back in the Asian financial crisis didn't fall over because they had too many loans to crony capitalist corporations. Financial crises start because banks run out of funding. And in China, because the national savings rate is so high, China still saves around 40% of its income. And because you can't take that money offshore, the funding base for the banks is just rock solid. And so there's just no trigger for crisis, even as bad loans continue to pile up. The second thing I'd mention is China's policymakers, you just have to give them credit for moving early and effectively to head off financial risks. Think about what happened in the US in the run-up to the great financial crisis. No one was sounding the alarm on risks in the mortgage-backed security market. No one was sounding the alarm on the larger risks in the financial system. In China, back in 2016, they said, you know what? This loan growth is too quick. We need to clamp down on it. And because they moved early and took a bit of pain early on, that reduces the chance they're going to have that big systemic blow up.
Tom Orlik, great to get your perspective on the show. Very interesting. Author of the new book, China, the Bubble That Never Pops. Congratulations on that, and we hope to have you back again soon.
Thanks, Shauna.
Hey, investors. Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.